Hello there, Chuck. Glad you could join us for this grand adventure. Today, we're setting off on a journey that's a bit different from your usual day out. No cheese runs or moon rockets, but something just as exciting. The world of trading charts. Welcome to the wonderful world of trading charts where numbers and lines come together to tell fascinating stories about the markets. It might look a bit overwhelming at first, but don't worry. We'll take it one step at a time and you'll soon see there's nothing to be afraid of. Charts might seem complicated, but really they're just storybooks for prices. Each line, bar, or candle is a sentence in the tale of a stock, a currency, or even a block of cheese if you fancy. The ups and downs are like plot twists, and every chart has its own adventure to share. A trading chart shows where a price has been, its journey through time, and gives us clues about where it might go next. It's like having a map that not only shows you the roads you've traveled, but also hints at the best path forward. Traders use charts to check the financial weather, making smarter decisions by seeing price history. Just as you'd check the forecast before heading out, traders look at charts to prepare for what might come next in the market. Instead of guessing, they use charts to spot when to buy or sell. It's a bit like waiting for the perfect moment to open your umbrella. Timing is everything, and charts help you get it just right. Think of a chart as a sketch for a trader, providing structure and insight. It's a blueprint that helps you plan your next move, whether you're building a rocket or just trying to make sense of the market's ups and downs. Without charts, trading would be like flying the techno trousers with your eyes closed. Messy, confusing, and likely to end in a right pickle. Charts keep you steady, so you don't trip over your own feet. Charts are essential tools for navigating the market with confidence. They're your compass and your map, helping you steer clear of trouble and find the best opportunities, even when things get a bit bumpy. They're the first step to understanding the market's story. Every great adventure starts with a map, and in trading, that map is your chart. So, grab a cup of tea. We're about to explore the land of charts. Settle in, get comfy, and let's unravel the mysteries together, one line at a time. By the end, you'll see charts as helpful guides, not confusing squiggles. They'll become your friends, showing you the way and making the market feel a lot less mysterious. They're your trusty sidekick, helping you figure things out. With a chart by your side, you'll never feel lost, even when the market gets a bit wild. Together, we'll learn to read their stories and maybe spot some cracking opportunities. Who knows? You might even discover a hidden gem or two along the way. And remember, every chart is a chance to learn something new about the market, about trading, and maybe even about yourself. It's going to be a grand day out indeed. Ready? Let's dive in and see what adventures await us in the world of trading charts. No penguins in disguise here, just clear, simple charting. Let's get started and make sense of the market together. Let's dive into the world of chart styles. These are the visual tools traders and investors use to make sense of price movements in the market. Understanding the differences between chart types is key to reading the story behind the numbers. The three most popular chart styles you'll encounter are line, bar, and candlestick. Each one offers a unique way to visualize price data, and each has its own strengths. The line chart is the simplest of all. It's just a flowing line that connects the closing prices over time, creating a smooth path that's easy to follow. This style is perfect for getting a quick sense of the overall direction, whether prices are trending up, down, or moving sideways. It's great for spotting long-term trends at a glance without getting bogged down in details. The bar chart adds another layer of detail. Each bar represents a specific time period and shows four key pieces of information: the high, the low, the opening price, and the closing price. This gives you a more complete picture of what happened during that period. Think of it like a blueprint for price action. Each bar packs a lot of information into a single shape, making it easier to analyze volatility and price ranges. The candlestick chart is the star of the show for many traders. Each candle has a body, which shows the range between the open and close, and wicks, which show the highest and lowest prices reached during the period. The color of the candle tells you at a glance whether the price went up, usually green or white, or down, red or black. This makes it easy to spot bullish and bearish periods instantly. Candlesticks make price stories vivid and easy to read, showing not just the numbers, but the emotion and momentum behind each move. Use line charts when you want a big picture view, perfect for seeing the overall trend over weeks, months, or even years. Bar charts are your go-to when you need more detail about each period, like the range of prices and how much the market moved. Candlesticks, with their expressive shapes and colors, reveal the market's mood and momentum at a glance, helping you spot patterns and reversals quickly. So, pick the style that fits your needs and your trading style. Some traders use all three, switching between them depending on what they're looking for. Now let's explore how to actually read and interpret what's on these charts, so you can turn raw data into real insights. Every chart has two axes, price, vertical, and time, horizontal. The price axis shows how much something costs. Higher up means higher price. The time axis runs left to right, showing the past to the present. Each point on the chart matches a time and a price. On bar and candlestick charts, you'll see four key prices: open, high, low, and close. These tell the story of buyers and sellers during each period. To read a chart, match a time on the bottom to a price on the side. Watch how the price moves over time, like a flipbook animation. This helps you spot what's happening and what might come next. The axes frame the story, the prices are the main characters. Let's see what patterns they create. Now for the fun part, spotting trends. A trend is the main direction of price up, down, or sideways. An uptrend is a series of higher highs and higher lows, like a staircase going up. A downtrend is lower highs and lower lows, a staircase going down. Sideways trends mean prices bounce between similar highs and lows with no clear direction. Trends show who's in control: buyers, up, sellers, down, or neither, sideways. To spot a trend, ask, is the chart moving bottom left to top right or the reverse? Draw a trend line to make the direction clearer. Trends are the main plot of the market story. Learning to spot them is a key skill. They help you understand the market's mood. Let's look for the next clue: support and resistance. Charts have invisible floors and ceilings, support and resistance. Support is where falling prices tend to stop and bounce up, like a floor. Resistance is where rising prices stall and turn down, a ceiling. Find support by spotting where prices have bounced up before. Resistance is where they've turned down. Draw horizontal lines to mark these levels. Prices often bounce between support and resistance in a sideways market. These levels help you spot where price might pause or reverse. Let's get hands-on with candlestick patterns. They reveal the market's mood. These patterns are like the market's body language, giving us insights into the emotions and actions of buyers and sellers. By understanding these patterns, we can make more informed trading decisions. The doji has a tiny body. Open and close are nearly the same. It signals indecision. When you see a doji, it means the market is at a crossroads, and neither buyers nor sellers are in control. After a strong trend, a doji can warn of a possible reversal. This is especially true if it appears at the peak of an uptrend or the bottom of a downtrend. Traders often look for confirmation from the next candle to decide their move. The hammer has a small body at the top and a long lower wick, found at the bottom of a downtrend. This pattern suggests that sellers pushed the price down during the session, but buyers managed to push it back up. It shows sellers pushed the price down but buyers fought back. This tug-of-war indicates that buyers are gaining strength and a potential upward reversal might be on the horizon. It hints at a possible upward reversal. Traders often look for a confirmation candle to validate this pattern before making a move. The shooting star is the opposite. Small body at the bottom, long upper wick, found at the top of an uptrend. This pattern indicates that buyers tried to push the price higher, but sellers took control and pushed it back down. It means buyers pushed up, but sellers took over. Possible reversal down. This pattern is a warning sign that the uptrend might be losing momentum, and a downward reversal could be imminent. These patterns are the market's body language. They tell a story of the ongoing battle between buyers and sellers, helping traders gauge market sentiment. They don't guarantee the next move, but they give clues. By combining these patterns with other technical analysis tools, traders can increase their chances of making successful trades. Watch for them at key support or resistance levels. These levels are critical as they often act as barriers where the price tends to reverse or consolidate. Combine patterns with trends for stronger signals. When candlestick patterns align with the overall trend, they provide more reliable signals for potential market moves. Candlesticks help you read the market's emotions. By understanding the psychology behind these patterns, traders can better anticipate market movements. Let's add another tool: volume. Volume can confirm the strength of a candlestick pattern. High volume during the formation of a pattern adds credibility to the potential reversal or continuation signal. Below most charts, you'll see volume bars, showing how much was traded in each period. Tall bars mean lots of trading. Short bars mean little activity. Volume shows the strength behind a price move. A breakout with high volume is more convincing than one with low volume. If price rises on big volume, the move has power. If price moves on low volume, be cautious. It might not last. Falling volume during a trend can warn it's losing steam. Volume confirms what you see on the price chart. Use it to spot real moves and avoid false signals. Even the best inventors make mistakes. Let's avoid the common charting blunders. Don't overload your chart with too many lines and indicators. Keep it simple. Focus on trend, support, and resistance first. Always check multiple time frames. A trend on a short chart might not match the big picture. Don't ignore volume. It confirms the strength of a move. Beware of false breakouts on low volume. Remember, patterns are clues, not guarantees. Trading is about probabilities, not certainties. Don't risk too much on a single pattern. Use charts to manage risk, not predict the future. Be ready for surprises. The market doesn't always follow the script. Learn from mistakes and refine your approach. Stay curious and keep improving. Now let's wrap up our grand adventure. We've toured trading charts, learned about trends, support, resistance, candlesticks, and volume. The key to mastering charts is practice. Look at lots of them. Use free charting tools to explore different markets and time frames. Try paper trading to practice without risking real money. Make mistakes, learn, and build confidence. Keep learning, read, watch, and follow experienced traders, but think for yourself. Develop your own style and trading plan. Be patient. Chart reading is a skill that takes time. Expect setbacks, but see them as part of the learning process. Enjoy the puzzle and have fun with it. With practice and curiosity, you'll soon read charts like a pro. Keep a cup of tea handy and stay inventive. Cracking job, Chuck.